Hey out there, welcome to another video, The Kevin Strong Show. And in this video, we're going to talk about, is the stock market set up for a big correction or possibly a stock market crash in 2025? I'm going to show you a chart. It has a trend that goes back to like 1929, almost 100 years. It kind of shows that the S&P on a monthly basis has pretty much topped out. I do think we're going to reach an all-time high with the S&P. Probably this month or early February at the latest, but by the second quarter of this year, I think things are going to get quite nasty, and that's going to be the beginning of a nasty bear correction. And I think it could take over a decade to get your money back if you are calculating your income and your net worth based on an S&P that's due to reach an all-time high, let's say within the next 30 days or 45 days. I don't think you're going to see those numbers for at least 10 years. So I'm going to give you some facts and some historical data to kind of support this narrative. If you're new to the show, welcome. Start off by hitting that like button. Think about subscribing by hitting that bell notification. So without further ado, we're going to first of all slide over here and go to this chart. Not really a chart, but just kind of like some information. So this basically talks about the monthly S&P 500. And what happened to it during a recession from peak to its trough, the drawdown. So it goes back to 1970. There's counting 1, 2, 3, 4, 5, 6, 7, 8. So if you aggregate all of those, it's around a 32% drop starting from 1970. So as you can see here, the most recent one was minus 34% from peak to trough during the healthcare crisis in March of 2020. And before that, the most notable one was the great financial crisis of 2008 to 2009. And as you can see here, what happened during that period was that the S&P 500 drew down to 57%. One thing to keep in mind that's different from back then to now is that we did not have all-time debt like we do. National debt, corporate debt, consumer debt. We are a debt nation. The Fed has been aggressively cutting rates. It's not doing anything. Look at how the bond market has been reacting to that. So those of you who subscribe to the narrative that you think the Fed really controls interest rates, I think you are sadly and respectfully mistaken. That is not the case. The bond market is the tail that wags the dog, not the other way around. So as you can see here, we've seen some significant drawdowns. In 2002, it was 49. I think this next one is going to make 2009 look like a walk in the park. So for those of you who are contemplating retirement, none of this is financial advice. None of this is legal advice. Please consult a certified financial planner, tax attorney, whoever you lean on to for professional advice when it comes to planning your retirement and getting financial advice. This video is for educational purposes only. Now, back to the video. I'm going to show you a chart that kind of illustrates a channel that goes back to the Great Depression to 1929, and it shows you how we have, over a period of time, worked our way up, hit the top of that channel, which we have done now. We may go a little bit over that, but clearly it's set up that we've hit the top of a trend line and we are due for a systematic, violent pullback. So let me go ahead without further ado and pull this chart up. Like I said, decided to do this video. My good friend Joe, I won't mention his last name. He goes, hey man, I really appreciate the information that you put out on Facebook. So I'm just trying to give you guys a heads up. Look at this video, talk to your significant others, hell, talk to your financial planner, certified financial planner, and say, hey, here's this guy on YouTube saying all this stuff. Is there any validity to what he's saying? Is there merit? Is this plausible? Because I guarantee you, numbers don't lie. This is very concrete information. And if you don't take an interest in securing your own financial future, you will be a casualty in 2025 and beyond. So without further ado, without me jabbing a little bit more, let's go ahead and look at this chart. So as you can see here, back in 1929, this is a channel. This is the top of the channel, and this is the bottom. You can't really see here because it's faint, but this is 1929, and that's when we hit the top of this channel, and it was a violent pull down. Most of us who were watching this video wasn't alive at that point, but you can see how big of a pullback this was. And this perforated line here in the middle of this channel, we'll just call that the halfway point. As you can see here, we hadn't hit, the next time we hit the top of this channel was in 2000. That was during the great, the dot-com bubble, I'm sorry, the dot-com bubble. And it almost came down and touched the halfway point. This was a significant pullback, right? Because around 2002, that's when the S&P went down 49%. I'm just tying that in to the other chart that I had shared with you. And as you can see here, we had another one kind of around, it almost hit the top of the channel. Once again, it came down. That would be 2020. That was down 34%. So it doesn't look as violent because it's hard to measure when you're looking at this graph. But it clearly shows that when we hit the top of that channel, we bounce back. Now moving forward to 2024 into 2025, as you can see here, we're about to hit that channel once again. And this line is drawn to show you this is where support is. This is where most likely, if and when a bear market occurs in the latter half of 2025, if not sooner, systematically over the next months and possible years, you're going to get a little bit of volatility up and down. But ultimately, that first big drop could settle right here. And I'm telling you, just drawing from here to here is a hell of a lot higher than 57%, which is the number it was from peak to trough during March of 2009. This is going to be a really nasty pull down. If we get to 2000 levels, haven't done the numbers, but that could easily be a 60 or 70% drop. Who knows? But the reason why I'm sharing this information with you is that for those of you who are contemplating retirement in the next 7 to 10 years, and you have experienced so much positive gain in the stock market over the last 5, 6, 7, 8, 10 years, this is not financial advice. Now might be a good time to move to more conservative investments unless you understand what you're doing with your money. For those of you who rely on a certified financial planner, share this video, share this information, because that person typically is going to tell you that guy's crazy. That's just probabilities. That's not possibilities. Even though we got a 100-year track record showing that when it hits the top of that trend, it's going to violently pull back. You can't time the market. That's what you're going to hear from the professionals. You can't time the market. Well, if this happens, which there's a 100-year chart that pretty much says it is going to happen, to what extent we don't know. What position are you in? Are you old enough to ride out a 7, 10, or 15-year peak to trough, and for that thing to come out of its trough and to come back up to its all-time highs in 2025? Let's say we don't get that to 2035 or 2040. How old are you going to be 15 years from now? What does that do to your net worth? How does that impact your retirement plans? Just like the folks who were counting on hundreds of thousands of dollars worth of equity just before the great financial crisis of 2009, because they thought they had $500,000 worth of equity in their homes. And they were planning on that to help them ride into the sunset to enjoy retirement. And just when they thought that money was counted for, the housing market imploded. All of that equity vanished, and it forced people either to go back to work or have to deal with the reality of never having to retire, never being able to retire again, because money they were counting on, they're not going to live long enough to get that money back. And I think we're going to repeat this again. So for those of you who don't take heed to this video, or don't at least question a financial planner to say, this is a 100-year chart, what's the likelihood of history repeating itself when we have all-time U.S. debt, all-time corporate debt, and all-time consumer debt? And if this bubble pops, what's the likelihood of us getting back to those all-time highs? I think few and far between. I think those of you who understand how to trade markets, where if the market goes up, if it goes down, or if it goes sideways, you know how to make money. That's in options, or just understanding stocks in general. You're going to have to come up with some type of supplemental way, but just sticking your money into an index fund or listening to what a financial planner has to say could be a death sentence for you and your significant other. So this is going to do it for the Kevin Strong Show. If you enjoyed this video, if you got value out of it, hit the thumbs up. If you have not subscribed to the channel, please consider doing so at this time. Have a great, great Sunday, because today is January 19th, 2025. We have the new administration coming forward. We might get a little bit of an exuberant pop from that, which I expect. But like I say, within the next 45 days, definitely by the second quarter, I think things will turn for the worse in the stock market. You guys take care and take care of each other. Always keep your credit score up and your debt down. This was the Kevin Strong Show, and I'll see you in the next one.